Okay, Good evening, everyone. I'm going to try and start again. Good evening, everyone. I'm going to have to make this loud. I have a feeling, yeah. Steve, there's an order, right? So I know you're here, and then this is Milind, and then you're two. Yeah, yeah, yeah. I think once they're sitting now, they'll start. Start. Thank you. Thank you.
Hi, good evening. Warm welcome to all of you, to our clients, well-wishers, friends. A big welcome to a lot of Incedo folks as well who've flown in from all over the world to be here. Saurabh, our chairman, is here from Singapore. The Incedo Innovation Series is very close to our heart. It's somebody just asked me, why do you do this? And we said, because we learned from this. We learn from great minds talking. We like to be at the seat of innovation and listening to folks such as this panel talk. The event right before this was a really interesting one where we had 15 fintech leaders come and speak to folks that are in the enterprise and tell them how are they innovating, how are they spawning new business models. So that was our previous event. And in this one, what we were hoping to really talk about is how do you really innovate in the enterprise? What are best practices? What are great innovation models? What are great organizational models? So once again, thank you to all of the panelists for lending your time and doing this. We're really excited. I'm going to ask Penny Crossman, who's an editor-at-large at American Banker, to introduce everyone. And then Anurag Rana from Bloomberg Intelligence will moderate the event. So welcome, everybody.
Thank you. Raina asked me to just share a few thoughts on current trends in finance and technology and then introduce a panel. I think, I'll try to keep this quick, but I think we've seen a tipping point on a few different technologies in the past year. One that kind of surprised me last summer was robotic process automation and how the extent to which a lot of banks are taking that on. We saw BBVA, American Express, BNY Mellon and others, really start to take that seriously. We're seeing them use it to help with settling trades, helping to clear trades automatically. We're seeing, I saw a New Zealand bank is using bots for account opening, or they're developing that. We're seeing banks want to use bots in their money laundering, having a bot go out and get the supplemental documents that are needed to figure out if someone really is a money launderer or a legitimate customer. And we're seeing bots, of course, start to be used in customer service. And we had a retail banking conference last week, or this week actually, and even community banks and credit unions are talking about how can we use bots to make our customer service people more productive and help them to answer either the very basic questions or the more complicated questions even by going and obtaining the information that they need to help them in real time. And I think, and there are obvious benefits with that. There's efficiency, there's, employees don't have to do some of the mind-numbing tasks that took up a lot of their time before. And, I think the unintended consequence, like always with technology, is that jobs will be lost. And a lot of these bots are going to take the work of entry-level workers. McKinsey predicted that AI and robotic banking will displace 110 million full-time workers by 2025. And even the large outsourcing companies are hiring 40% less people this year, and I think a lot of it is due to that trend. So I don't know what the answer is, but it feels like something that companies have to think about. What are we going to do with this displaced workforce, and what is the future there? I think that the second trend is just the incredible buzz, but also adoption in machine learning and deep learning. And again, we've seen financial institutions deploy that for so many things, fraud detection, helping to weed out the false positives, finding rogue behavior. Credit Suisse and Palantir are a great example of how they're trying to find the rogue traders. And NASDAQ is already using artificial intelligence to watch what traders are doing and compare that to their actual chats and see, how does what they're communicating, how does what they're saying match what they're doing, and where might there be something going on that's not so great. And we're seeing, obviously, compliance with IBM buying Promontory, and now all those, highly paid Promontory consultants are feeding Watson what they know about compliance. And, IBM wants to go into a bank and help you figure out how you're going to need to comply with new and existing regulations. We're seeing artificial intelligence in online lending decisions. A lot of the online lenders are ahead on this, On Deck and Cabbage and companies like that. They're able to make their decisions so quickly, partly with the help of artificial intelligence. We're seeing it used to help make recommendations to wealthy customers. ANZ is using Watson to feed, to sift through all of their client information and feed their advisors very specific advice. And we're seeing other upcoming companies like Scream doing a similar thing, taking Google search data and consolidating that into pitches for advisors. And the list goes on of ways that could be used. Again, helping companies make better, faster decisions, fewer false positives when it comes to fraud and risk and compliance and security. And again, the unintended consequences include fewer jobs. I mean, we saw BlackRock yesterday, not to pick on Lisa, but they're letting go 40 people. Some of them are portfolio managers, and they're not necessarily being replaced with robots, but artificial intelligence is part of that, because you don't have to have people make all these decisions anymore. The artificial intelligence can be very helpful. And she'll probably get more into that, too. And I think another unintended consequences of machine learning is the potential for unfair lending decisions. And this is something I've written about a lot, but when you have these companies who are looking at where you went to college and deciding how creditworthy you are based on that. I mean, nothing wrong with a great institution like Harvard, but is it really fair to grade someone who went to Harvard so much higher than someone who went to a SUNY college or some, less accredited school? And I'm not saying they necessarily do that, but where you go to school has become incredibly important in creditworthiness, and I think that's going to have that's starting to have a disparate impact, and it will continue. I think that's something that everyone's going to have to think about. And I mean, that's just one example. And people talk about machine learning running amok. That's just one example, but there's a lot of ways in which that could happen, and I'm sure the panel will do that. And the third trend that I think has sort of come alive in the past year is blockchain. We've been talking about it for 10 years, and there aren't any huge implementations, but there are some real-life implementations. There are some overseas payment blockchains like Ripple that are gaining traction, that are starting to send payments over a blockchain-style platform. Canadian banks are now going to manage their customers' identity over a blockchain and using the Hyperledger fabric. That's close to reality. Northern Trust is managing private equity deals on the island of Guernsey on a blockchain. And to me, those things are real, even though they're not huge. To me, that shows that there is real momentum happening and real change. And the benefits, obviously, you could cut out middlemen, you could streamline processes, and I think the unintended consequences could include security. I'm not sure security has been fully thought out, because once you remove the strictures of the actual blockchain and mining and the way the blockchain handles public and private keys, you get into grayer areas of how is that security being handled. So now I'd like to introduce the panel. We have a moderator who will be coming up is Anurag Rana, who is a sector head and senior equity analyst for software and IT services at Bloomberg Intelligence. He's been there since 2010. He covers large cap tech companies, including Microsoft, Oracle, SAP, Salesforce, and a number of others you can see in the program. Before this, he was a senior analyst at KeyBank Capital Markets. And before that, he was with KeyCorp's Risk Management Division, where he focused on market risk review for the Capital Markets Group. We have Lisa Dalmer, who is Managing Director and Chief Operating Officer of BlackRock's Global Technology and Operations Group. She joined BlackRock in October 2014. She came from NYSE Euronext, where she was the Chief Operating Officer and Executive Vice President for European markets. She joined NYSE as a result of an acquisition, and she was formerly head of Global Exchange Traded Products, ETFs and indices, and led the integration of product teams and business model change after the mergers of the New York Stock Exchange, Euronext, Archipelago, and Amex. And next to Lisa, we have Steve Rubino, who is, he has most recently been the Executive Vice President and Chief Technology Officer for Catalina, which is an advisory firm to banks and tech companies. Before that, when I knew him, he was the head of Chief Information Officer at the New York Stock Exchange. Prior to that, he was the Chief Technology Officer for Archipelago Holdings in Chicago, and he also was called on to integrate the three major mergers and acquisitions of NYSE Archipelago, NYSE Euronext, and NYSE with the American Stock Exchange. And we also have Milan Nagnor, to my immediate right, who is Managing Director at Citi and Global Head of CTO Data Services. He helps come up with modern solutions for all kinds of data and analytics needs at Citi. He and his team deliver solutions to clients focused on revenue discovery, regulatory compliance, and business performance transformation. He manages a number of platforms at Citi. Before he joined Citi, Milind worked for JPMorgan Chase in New York in the Trade and Treasury Services as Principal Architect and Apps Development Group Manager. And before that, he worked as a systems integration consultant for financial services clients with PricewaterhouseCoopers. And last but not least, we have Ramiro Munoz, who is head of global product development and innovation for Citi's TTS payments and receivables business. He is based in New York. He previously worked in Bogota, Miami, Lagos, Budapest, and Los Angeles in multiple roles across retail and corporate banking. So thanks for coming to New York. So now I will turn things over to our moderator.
Thanks, everyone. It's a pleasure being here. I think I should get that loan before machine learning figures out I went to a SUNY. So one of the most important things, or one of the most exciting things that I have seen over the last few years has been this acceleration in innovation. And nobody leads it better than the banks or the financial services industry. I mean, if you were to just compare your, the information you have, whether it's a credit card or your banking statement, compared to, let's say, your health records, you can really see the difference of where the innovation is. And personally, I'm extremely excited to learn a lot from our panelists today because, we hear a lot on the marketing side when IBM is saying, we're doing so many projects on blockchain, or if SAP talks about all the different things that they're doing, we really don't have a very good idea of what's really happening at the grassroots level. So this is a very good opportunity for me as well to learn from all of you here as to where is the money going, what kind of projects are being done, and try to separate the myth from reality. So the first section that we want to discuss is about emerging technologies. We hear a lot of these you could say buzzwords out there, but let me just start with Milind and say, Milind, when you look at everything that you run, and all these emerging technologies that we just heard about, where is it that you are most optimistic or bullish that would give you the highest return on investment for the dollars that you're putting in?
So I would say 3 areas, and starting with the channels. So everybody is aware of the concept of digital. People usually associate it with channels. So meaning, do I have an app for banking? Is there an app where becomes our main channel to interface with our customers? So that's the first part. The second part is using some enabling technologies like robotics to handle typically tedious and laborious tasks. So we are seeing a lot of return on investment on that second aspect of digitization. And the third is what I would say is the entire ecosystem itself. So this is equivalent to what Amazon created, for example. So it's an entire ecosystem. It brings together buyers and suppliers, and the entire supply chain is digitized. So we have something equivalent of that at Citi that we built. It's called an Enterprise Analytic Platform, or EAP. And what it is a big data, big compute platform with in-memory and machine learning technologies. And it's an enabler for our businesses. So we have a very strong revenue pipeline coming out of, and I'm sure Ramiro will touch. Ramiro is one of my clients who is using some of these services to enable TTS towards digitization. So there's a very strong revenue pipeline. But we have taken the next step now where traditional data warehouses, data processing, ETL repositories, etc., a lot of that we are ready now. We are not ready 2 years back, but as an industry and as a firm, we are ready now to take on some of the more traditional and complex data processing activities themselves, which is what I call the business process digitization, and some people call it modernizing the core. So in addition to advanced analytic projects, these platforms like these are enabling us to modernize the very core business processes of what we do as well. So I would say these are the 3 areas where we see the maximum potential return on investment and growth. So
when you buy a new company, or you get something that is outside the system, how easy is it to integrate that systems into your what you have built?
Well, the simple philosophy we follow is, first, we had to be very clear in our minds what our strategy is and what our ecosystem looks like. And then when we try to select external vendor products to help us, they have to have the capabilities to work with our ecosystem. And that's the key. Otherwise, we will not partner with them.
Fair enough. Lisa, we've heard a lot about artificial intelligence and chatbots. Please give us some idea about is this really something being used, or it's a lot about just for the news?
So first, thank you very much for having me. It's a pleasure to be here, and I'll go on record as being the token non-technologist on the panel. So I think my esteemed colleagues are far more skilled in hardcore technology, which is why I think my experience is really interesting, because as we were talking on the call before the panel, the language and the vocabulary covers a pretty wide spectrum of what's artificial intelligence versus machine learning. What is big data really? And so what we're observing is, as we think about what we're trying to improve and what the goal is, we spend time separating between, are we actually looking for the technology to make new inferences and define new relationships, or do we have to feed it a hypothesis? So there's different ways and different aspects you would use different technologies. You have to really understand the business application and what you're trying to get at. Otherwise, you tend to have just technology for the sake of cool factor, and then it doesn't fit into the process. It doesn't integrate with the next step in the framework. It can't do the handoff to, let's say, the client reporting piece. So, in my role, I sit with the technologists, and they're always throwing these lingo and the acronyms, and I'm like, okay, so break it down. How is it going to improve it? What is going to be, what's the benefit my people and my process will change? Instead of having 18 steps, will we have 4? Right? So I think it's really important to understand, how you're going to change things from a business perspective. And we find, for example, BlackRock is not Citibank. Citibank has a much different scale objective than BlackRock does. We have we have thousands of customers. You've got millions, right? So, what works in our environment for scale doesn't necessarily work in yours. And, we have deployed chatbots, and we're just deploying Amelia recently for a part of our help desk services. So, there's a lot of digitization opportunity, but I think how you do it around the business process and how you define scale for your organization is entirely different, business case to business case.
One of the important things you just mentioned was, understanding the algorithm or understanding the process. When you look into IBM's Watson platform, or IBM working with the insurance industries or the healthcare industry, it takes it a long time to understand, the industry or the domain. In your experience, what has been the outcome? How long it has taken for the you call the AI system or the machine, whatever that package is, to learn and be truly productive?
Well, as we were saying earlier with Steve, technology doesn't program itself, right? It doesn't program itself. It doesn't, deciding where to deploy it, how to deploy it, that doesn't happen by itself, right? Like, there's still people very much driving the vision of the outcome. And I think for our organization, we're very, very mindful of, the way things fit together. And I think from an ROI perspective, the area where I see our greatest opportunity set is in the customer experience. And you don't have to necessarily know financial services to know what is a good customer experience, right? Good customer experience, the dimensions of ease of use, can I get the information when I want it, how I want it? Those things happen regardless in the healthcare industry, in consumer products. So you have to actually kind of free yourself from the industry and think about, how the process is being applied. So I think there's a learning curve, but that's where it's great to be in a setting like this, to have contacts and work with people from other industries.
Have you seen a change in behavior from customers? I mean, I still like to call and ask for things, and people I know I work with, they would hate to talk to a human. They just like to text people and get answers.
And that's I'm sure Citibank and others have the same problem. There's still the range of customers who want to get their bank statements mailed to them, right? There's those who want to have no statements whatsoever, and you've got the person who still balances their checkbook and doesn't have an online account. Like, who balances their checkbook these days, right? Like, they taught that in high school, I remember. But they don't teach that anymore. But I think that you have to understand, you have to segment between your high touch, your medium touch, your low touch, and understand the ROI that you'll get from investing in those channels. So it really depends on your business model.
Fair enough. Steve, when we had our introduction call, I mean, one of the things you said really, made me think quite a bit about blockchain. I would say for the past 2 years or so, I've been hearing a lot of, discussion around blockchain, a lot of interesting articles being written. IBM's marketed quite a bit in the last couple of analyst days it has done. What's your take on it? And give us a little bit of background of, why you think the way you think.
Sure. So I've been in technology long enough that you become cynical after a while, right? Because you say every year there's a new technology, you fill in the blank, this technology changes everything. Nothing will ever be the same. Last year it was cloud and big data and data science, and blockchain, and this year blockchain and artificial intelligence, and it might have been service-oriented architecture, which then became microservices. They all will change. Nothing will ever be the same. And I think the only one that's been true for me is really the internet. I think we could all agree this probably had a profound influence. Jeff Bezos is the second richest guy in the world now, so I think that's proof. But so blockchain is an interesting, and I tend to be a contrarian. So take what I say with a grain of salt. I'm sure I could get some pushback, and that makes for great conversations. So if I said to you, anybody in this room, 10 years ago, I want to build a generalized ledger system that's resilient, distributed, immutable, secure, I don't think a single one of you would have said, that sounds like a great idea. We got to wait for something like blockchain to be developed. Otherwise, it's not possible. The technologies that we are all familiar with, the database technologies, whatever brand you want, and the code, we could have built that. We didn't need blockchain. Blockchain is a very fancy way of doing it, and there's a lot of good things. We could have built that with conventional technologies. One of the issues with blockchain and one of the allures of blockchain, at least in the beginning, was there would be a standard, right? And if everybody in this room coded to the same blockchain, because there was one blockchain, and we had a general interoperable ledger for the world's transactions we could all read and take from, I think that's fantastic. When you get a universal standard like that for any technology, let me know, because I'd like to hear about it. So we have 20 different versions, and it's a horse race, and there'll be winners and losers. But I think the more, I'll call them the more astute observers, I'm self-serving when I say that, the more astute observers say there was a lot we could have done that's blockchain-like with conventional technologies. There was never an impetus to do that. We could have gotten the same benefit. So I think there will be some great developments that come out of it. But I remember not that long ago, I was at a symposium at MIT. There was an esteemed panel down like this one talking about the wonders of blockchain. And a guy in the audience, not me in that time, raised his hand and he said, could you explain to me, esteemed panel, what we can do with blockchain that we couldn't have done with all the technologies that we're all familiar with? There was a pause, which already is a bad sign. And then the guy said, I think this is more secure. Well, think is the key word there. And then when I challenge blockchain advocates, and again, I'm sure there could be pushback, and it could be great. I said, if blockchain is that secure, how about all the hacking incidents I've read about? And the people that are real blockchain fanatics will say to me, well, yes, but that's not the technology. That's the process and the governance and the this and the that. And it's a guy who made a human error. Okay, well, it has the same frailties as any other system that I've ever known in my life. If a human error can screw up blockchain, it can screw up a lot of things too. So there's no magic here. Everything looks like magic because it's shiny and new and it gets hyped. There's no magic here. And some of the old technologies we've used or that we were very familiar with can do what we wanted to do if we just asked it to. And kind of a little segue there in terms of replacing jobs. Lisa and I and a couple of our colleagues in the audience, if you want to position it this way, the first 10 years of this century, we replaced most of the traders in the United States and the capital markets in Europe, the major capital markets, with robots. We did it. And we took institutions that have been around for hundreds of years, and we replaced the humans with robots. And we didn't use one shred of AI to do it. And yet there are robots running the exchanges, and they do a pretty good job. You can argue whether it's, they're good or great or whatever. But we had a huge impact on it. We didn't have to wait for machine learning to do that. We did a really good job of it. And even if I go back a little bit further, the first AI spring, which most of you probably don't remember because it was last century, but I remember being a kid and being part of that. And I wrote one of the first AI systems at that time. And it's a chapter in a book. You can look it up. You can Google it. You'll find it. And helping manufacturing systems. And there we were codifying the knowledge of experts. The real expert systems where you'd sat down with a domain expert and say, tell me the 600 things you think about. And the problem with that is that those systems were very brittle. Just like any algorithm that's asked to operate outside its calibration mode, it starts to miss the edge conditions, and then you get bad results, and people say, I'm not going to use this system. So machine learning takes the other approach. It says, just give me a bunch of data, and I'll make the inferences for you. And that's great, except for the fact that, and I think this is some of the questions we alluded to, it's hard to understand how the models are coming to their conclusions. And whether you're an inquisitive user of it, whether you're an owner and you're giving it to your customers, whether you're a regulator, you kind of like to understand how the decisions are made. And it's hard to peel back the networks in there. And by the way, the technology supporting machine learning is also decades old. It's just more sophisticated today. It wasn't invented just a year or two ago. And understanding that is also a difficult problem too. So There's lots of opportunity, lots of great tools. There is no magic in any of this, and a lot of common sense applies, and a lot of these things have passed our way before, just with different names and maybe slightly different levels of sophistication. But it's a lot of it is, we've seen it before, and if we use all of our great human intellect, and which is why I like to refer to this stuff as augmented intelligence as opposed to artificial, and that's self-serving too, because I want to have a job in a few years, I don't want a machine to replace me, and if it's augmented, that means the machine works for me, I don't work for the machine, but we'll see how that changes. And anyway, so enough of that. Thanks.
Great.
I happen to be a very low latency speaker. It's a habit from trading.
I mean, this is a good topic. So let's actually hear comments from our other panelists on the same topic of blockchain. Ramiro, what do you think? You know, I would love if you have the opposing view, though.
Okay, so I think first let pause. Right? First. So first, let me say that you know, like Lisa, I'm on the business side. I'm actually a recovering technologist. So
Okay.
so blockchain. I think that there's perhaps a lot of potential, but I would say, and I'm going to be a contrarian as well, this is a solution looking for a problem. So, you know, there's a lot of talk about, for example, blockchain technology being able to change the way that cross-border payments take place. And it's not clear that that can happen that easily. Because blockchain technology is basically the Bitcoin technology, and in Bitcoin you have money and the information about the money, and it's all one thing. You do not differentiate between the money and the information. I don't need to go to a bank or anybody else to tell me whether, you know, I have the money to make a payment. It's all within that message, that blockchain, you know, the trust is among the miners who are going to tell us whether that you know, that chain is correctly connected, right? But in the real world, with non-digital money, money is sitting with banks, and banks create a chain of trust. That's what banks ultimately do, and therefore, you know, taking the distributed ledger technology and keeping it separate from the way that money moves is an incredible challenge, because how will money move from one bank to the other? You know, there's, depending on how you look at it, I guess in SWIFT there's 8,000 to 10,000 banks. Making sure that a cross-border payment is going to be done through distributed ledger technology across 10,000 or 8,000 banks is not going to happen anytime soon. And so, it's because, you know, there is the challenge of the trust and being able to ensure that, you know, when money goes from one place to the other, it is going from a trusted party to a trusted party. That the distributed ledger technology cannot solve that problem when you're talking about correspondent banking. So I think that there's a lot of promise, but I'm not sure that distributed ledger technology is going to solve the problem of cross-border payments, for example, nor payments in general, right? I think that, you know, unless we put the money and the information about money together, i.e. central banks create a new type of money that, you know, puts those two things together, and then you don't need a bank, then perhaps this will flow very easily. Otherwise, I think there's very little chance that this is going to take over anytime soon.
I think, if I can add, I think Ramiro's point about adoption is very important, because even if you go with the blockchain where it's a private, because you can create a private network for a blockchain, you know, technology for the process, even if you go with a private network for like a very specific process, and you know the trusted counterparties, you know, fundamentally to get, I think, step change in the ecosystem, you do need massive adoption, as you're talking about. And it's very expensive for organizations to maintain multiple processes for the same activity. such that, getting to that adoption, right? It'll start small, whatever the technology is. There'll be a day where it just kind of turns the corner. So I think adoption has a lot to do with all of these different technologies, because that's what starts to create this the standard that you then rely on. Like to Steve's point, the internet, right? It does have a standard, though it's been, there's now other webs, right? So even that standard and even the way that works has changed over time. But I think adoptions are really important, because that has a direct correlation to the cost of deploying any technology.
And can I just say one other thing? And this is a little footnote to blockchain. It's not a deterrent, but it's something to remember. The total impact of such a thing. The machine cycles necessary to do mining are much, much greater than any kind of security scheme we do today. And there's this little thing we worry about called climate change. And the more electricity you use, the more climate change you're going to affect. So an unintended consequence of widespread blockchain adoption with lots and lots of miners in the world is our globe gets hotter faster. I don't know to what extent, but it's something to think about.
If I could offer a different perspective, just use earlier comment of nothing has really fundamentally changed, databases, etc. already existed. I feel that everything around us is changing, and here's a few simple examples. Technology is a lot more powerful today. A simple example, right? A decade ago, if somebody who's responsible for credit cards marketing, let's say, and decision management, came to technology and said, I want to analyze last 15 years of transactions, and the technology calculates, okay, 450 terabytes, 500, 700 terabytes of data. I want to put learning algorithms with non-linear regression patterns that can find pockets of these market segments which are untapped, which I have never gone towards because they either fall below the curve or above the curve, and I've never looked at these patterns or these market segments which may be both below and above the curve, but they are an attractive market segment. And I want to do all of this in 3 weeks. Somebody who is running a Teradata or an Oracle or a mainframe or an Etiza would say, either look at you like you're crazy, or they would go home, they would quit. Or today you can do this in a matter of days. You can create 450 terabytes of information on your big data platform. You can learn algorithms from it, and you can get this insight. So, and you can do it very fast. In fact, everything is changing the way we do. We no longer have two-year, 3-year, 4-year programs with elongated software development life cycles anymore. You have a strategy, you have a vision, but everything is 30, 60, 90-day sprints. Another example, voice analytics. If you said, I want to analyze what happens in my call center, and I want to look at my customer attrition rates and want to do a better job at it. 10 years back, you would form a committee. Then they would go around the world and pick a site, okay, which is economic, an operations center. Then you would spend a year hiring, about 100 operations people, and then you would make them listen to calls, and figure out what's going wrong. Today you can do it in a month, in 2 months, and put all your voice and phone logs on big data and do all this analytics. So to me, everything is changing, and if you're not catching up on these things, you won't be able to stay competitive anymore.
So let me comment, and so you're right. Things are getting faster, and I like to say in the big data world, which I've been doing for many years, the difference in big data over the years is the prefix of the data is changing. When I started, it was gigabytes, and now it's petabytes or exabytes or zettabytes or whatever bytes you happen to have in your data center. And we can crunch it faster, but the principles are the same. And I always like to throw in at conversations like this, cloud computing, which was just invented a few years ago, right? Unless you've been around for about 50 years, and I've read about this in history books, but cloud computing was invented in the 1960s. Except it wasn't called cloud, it was called time sharing. Some of you may have experienced it in school if you were in university at that time, or you read about it. And then you say, no, it's not the same. And then I'd say to you, virtual machines, you think that was a few years ago? Invented in the 1960s by IBM. The internet over which these things get transferred, the precursor to the internet, developed in the 1960s. And and the operating systems developed in the 1960s. The C programming language that a lot of our trading systems are still written in today, developed in the 1960s. Now, have we had advances in technology and has Moore's Law been speeding along and so we can do things faster and in shorter time frames with less people? Of course, but a lot of these concepts have been around for a long time. They're just more sophisticated today, but they're not, they're not brand new. They have different coats of paint on them and with new names, and thank God for marketers that can make these things really look exciting. But a lot of these things have been around for a long time. We're just making them better all the time, as opposed to the revelations.
One of the things I'll comment on this is some of these companies are forced to change from consumer behavior. Apple's just spoiled it for everybody, right? So when you see this massive disruption going down, everybody was happy, the traders were making money, the bankers were making money. You see this massive disruption going on the consumer side. Everybody comes to you as a bank customer, wants to get the same experience that you had, with your iPhone. How do you go out and convince, your CEO or your C-suite to say, this massive disruption happening everywhere, we need to innovate? What's the process around it? How do you go about doing it? Milind, do you want to start off with that?
Yeah, luckily we don't have the problem of convincing. Our CEO, he characterized Citi as a software company with a banking license, and he is and our senior leadership team is the one that is pushing Citi forward in this direction. So, no convincing required. All of us have the same experience in our non-work life, and whether it's Google, whether it's the iPhone, and our customers are expecting the same from us in work-related products as well, and our employees as well. So our board looks at our enterprise data and analytics strategy. We obviously look at it from a business perspective, from revenue generation, from cost avoidance, but it's all up there. All these topics that we are referring to here today are very much topics of discussion in our board, in our CEO forums, and our management dashboards. So that's the reality.
So when you're making this transformation, what's kind of the process of doing it? Lisa, if you just don't, you can't do it overnight. It has to be a process. What are the different steps that you have taken, in your previous roles and in your current one, where slowly you're moving more, digitizing a lot more things?
Yeah, I think, excuse me, to Milind's comment, convincing is not necessarily the issue. It's how do you sequence it side by side with your BAU, right? So for example, in our client service organization, they're in such a mindset and so deep in the bunker with the day-to-day of, the evolving needs from a regulatory perspective, from a disclosure perspective, from, what the clients are expecting, the need to kind of be able to step back and really free think around the digitization. That's tough to do, right? It's tough to rebuild the plane when it's going down the runway, ready to take off. And so as an organization, you have to be deliberate about making room for that. Sometimes that means bringing in people who have some expertise in the problem you're trying to solve, but not so much that they're stuck on kind of the barriers of, oh, but that doesn't work, we tried that 2 years ago, right? Well, the context is different, timing is different. Clients are, more open to change now than they ever have been. So I think you have to be deliberate, you have to create kind of, I wouldn't say isolation, but you do need to create, a special play space, right? A sandbox, if you will, or, a team that's got their goal, their task force is to look at outside influences. Who solves client experience best, right? Regardless of industry. Why? How? What do people expect? And think about what's transportable about that, and how do you bring that to your problem solving? So it's really the toughest part from a large organization perspective is how do you sequence it alongside BAU and not demotivate those who are deep in the BAU, because that tends to be, they want to participate as well, and you've got to make that connection without bringing the barriers and the kind of mindset baggage with it?
You know, Ramiro, you would be funding a lot of these projects. And you know, if you are paying the money, you would want a high return on investment of that. How do you decide what projects to bet on? You know, because the list is endless.
Absolutely. Obviously, the business case is critical. The problem is making sure that the business case is clear enough and well-defined. Looking at the different use cases, making sure that it's in the context of the client, making sure that the client, and in some cases the client's customer, are part of the design. Making sure that when we're introducing technology, we're thinking about the client's journey. How are we just automating something, or are we changing the client experience? Are we creating a new operating model? What does that operating model look like, and how is it that it is going to be attracting more business, either from same client or other clients? Those are the kinds of questions that we ask. I think it's also very important, but very hard in a large organization, is to come up with experiments, being able to come up with something quickly and deciding quickly whether it makes sense or not. Finding the right business model, the right target market, the right use case, making sure that you implement it quickly and learn quickly. And I think the big challenge is also that when something fails, everybody walks away, because nobody wants to be near failure, right? But actually what's really important is to make sure that when something doesn't work, why it didn't work, so we can learn and leverage it. So I think that's a very important thing. And then what I would say finally is that on the business side, we need to have more people who are familiar with the technology. They don't need to be coders or anything like that, or architects or anything, but they need to understand the technology so that they can have a closer understanding of how that technology can be applied to a business problem. I think that within our organization, we're trying to transform that, making sure that we get people who are more able to understand the technologies and ask the right questions, right? And then let the technology team tell us which one is the right technology platforms to use and why. But we need to make sure that it is the right technology for the use case, right? Making sure that we can ask the right questions. That is a pretty important thing that we need to have when we are evaluating a business case.
Steve, what's your opinion on this? Do you see, at least in some of the legacy companies or the non-internet-based companies, you see a lot more failure rates coming in compared to, let's say, the Googles of the world?
Well, it varies all across the board, and I couldn't agree with you more. This whole idea of value proposition is often overlooked. People are excited about, I want to do the newest technology, I want to do the next version, I want to use the latest programming language, and then you say to them, but at the end of the day, what's the value to us, what's the value to our customers, and how are you going to measure it? And I'm telling you that 9 times out of 10, when I ask that question, also the conversation stops. It's like, wasn't it enough that I was excited about the topic? There had to be a dollar figure associated with it? Yeah, because that's what we kind of do. We deal in dollars and cents, and we have a limited amount of resources to invest, and we can't invest them in an infinite set of projects. So we've got to pick and choose, and you've got to tell me what the value of doing this is and how you're going to measure it. And we all know sometimes it's really hard to measure the value to the nearest penny, but you have to have an approximation, otherwise you don't know what to do with it. And so that's always hard. And Lisa brought up the point of business as usual. Every fintech entrepreneur that I've known, that probably you know, will say to you their greatest advantage is they don't have any legacy to deal with. So everything is new. And of course, that's good for 24 hours, then they've just built their own legacy. It's smaller, but it's growing, and things start to slow down. But a lot of organizations are encumbered with legacy. Yeah. Whether you call it business as usual, keep the lights on, it's what brings the revenue in every day that funds the new project. So it's really, really important. And so trying to break off a group to do that is hard. My own personal style for doing that is, rather than go to the org chart and say, this sounds like a function that should be responsible for this, I do it on the basis of people. And whether I know the people or people I know the people, we handpick people from the organization, whether they're in finance or marketing or technology or wherever they happen to be. These are people that seem entrepreneurial, can seem to look around the next corner. You know, Alan Kay said a long time ago, the best way to predict the future is to invent it. And my favorite kind of people are when I get them in a room and I say, folks, let's pretend just for a second, even if it's as old as some of the companies that we have on this panel, if we were, with all the knowledge we have today about our industry and our company and our competitors, if we had the luxury of starting over again today with nothing, no legacy, what would you do differently? And the people that say, well, I kind of would do the same thing, just, you know, put a new face on it, okay, you can leave now. But the people that say, well, if you gave me that luxury, and I know it's hard to do that because we do have legacy, but if you gave me that luxury, here are the 5 things I would do, and here are the reasons I would do them, that's the beginning of a team. And then you try and get out of their way, give them the resources they need, understand the value proposition, fail fast, you know, all these industry phrases that we hear all the time, and just help them succeed and then figure out where it goes from there. I also tell, on the topic of transformation, which I think this is a general section of, I tell people, and these are, again, cliches, but I like to repeat them, you know, getting people to be comfortable outside their comfort zone, get comfortable with being uncomfortable. And another thing that always sticks with me and I think resonates with others is I tell people, if you come to work every day and you feel like you're entirely in control of the things that are your responsibility, you are not pushing hard enough. You're not taking enough chances. Because if you're not taking those chances, one of your competitors is, and you will learn it the hard way and you won't like that lesson. So if you're comfortable, you're too comfortable. You gotta be uncomfortable. Now, not so uncomfortable that, you know, the house starts to fall down on you, that's too uncomfortable. But you have to be a little bit outside your comfort zone every day, and then you know you're pushing, because as everybody on this panel has said, the technology is always changing, but the rate of change is accelerating, which makes it exciting as a technologist, but it makes it exhausting and very risky, because you gotta make choices quickly and then kill projects quickly. And it's not everybody's good at doing that, but it's a very uncomfortable time, and it can be used to your advantage, or you can just become a victim of it, and that would not be good.
Thanks.
Something interesting about business cases, if I could add, you know, and after, excuse me, after going through hundreds of business cases, and what we do pretty much on a regular basis related to new technologies, investing in our core, etc., it's very easy to lose sight of the forest if you get too much caught up amongst the trees. So as a simple example, you may start doing a business case with middle management in the risk, saying maybe this risk database that you run today, maybe you should think of re-platform. You know, you keep incrementally adding functionality, storage, etc. Maybe you should think of modernizing it to a more modern platform like big data, say. If you just focus on that one database, and then if you just look at my hardware, software cost is so much, you know, before and after, and then people would add in write-offs and in the capitalization, etc., and the strategy could get easily lost, you know, in a bookkeeping exercise. So the thing to be careful about is to understand the strategy, because if maybe it doesn't look good for one database, but why do you need a risk database? You know, if risk, finance, compliance, if all corporate functions can have the same database, the data fabric, and then otherwise they are making copies of the same information over and over again, that becomes a very compelling business case. So it's very important that you don't lose sight of the overarching strategy, and you do these business cases at the right level in the organization. And then once that makes sense, you just have to push it down, because after that, there cannot be too much democracy about, you know, individual functions wanting to do their own thing.
Milind, it's one of the things I've always wondered, and perhaps you know, you can start off this discussion on it, is when you look at a legacy company that has, you know, a lot of systems, if you're spending $100, anywhere from $50 to $70 would spend just on maintaining that stuff. Could be even higher as well. Then you have hundreds of projects that you could choose. So let's say, you know, in theory or in academically, the project that you talked about sounds like a very big project and required a lot of money. With budgets struggling, with almost everybody in the industry not ready to spend a lot more money. How's basically, how do you say, okay, we need to innovate, and these are the steps we're going to take to convince people that this is worth the money spent?
Look, reality is if it's an academic project with not a clear business case, it will not get funded, and it should not get funded. So everything starts with a business need. So it could be around regulatory compliance, and we are under ever increasing burden of that. We spend more and more of our time and resources on that. It could be under the auspices of revenue growth and targets under cost avoidance. So most projects get prioritized based on these criteria, and those are the business imperatives. So as technologists, our job is to make sure that innovation comes in when you start executing on these projects. And that's when you have to make the right decisions. Like Steve said, get out of your comfort zone. Just because you have worked on X technology for the last 10 years and you got very comfortable with it, doesn't mean that you should do your next regulatory project on the same device. So technology and modern digitization always has to be an enabler for a broader business goal or business project. We do have, for example, Ramiro sponsors something called, we have the concept of innovation labs, where some amount of research work happens, and a lot of ideas that get into production come from there. So there is a well-defined program for that, but it's, I wouldn't say, that would be the mainstream, funding mechanism for, how we do business.
Lisa, for...
Yeah, I would say what's interesting is kind of consistent with both the co-panelists here. You sometimes get in this mindset of incremental improvements, incremental functional enhancements. And yes, those can be innovative, but they're not necessarily the same as stepping back and saying, wow, do we really need to re-platform this? Is the chassis that we're building on, is it still fit for purpose, given we've just doubled our consumers or our client base or those that are pulling the data from us? So I think that it's important to go through. What's interesting is finance works on an annual budget planning cycle. I've never worked in when we look at our technology projects and now where we're making investments and where we're making decisions, it does not work annually. We need to think about it, every quarter. We need to actually be sitting down. Monthly would be a little too painful. But every quarter we need to be sitting down and looking, okay, what's on time, what's late, what is ahead of schedule, and how are we sequencing things against the BAU? Because to Steve's point, there is just a finite pool of resources. Whether you define that by people or by dollars, it is finite. And so, I think we try to have a view on what is BAU, keep the lights on, and what is, functional enhancement, and how are we looking at platform, the platform enhancements and where we need to re-platform things, because we've actually just bolted on too many things that sort of work, and you just end up with a very complex, ugly-looking thing. And the complexity, that spread of complexity, has a cost. It has a cost in time. It has a cost in untangling for problems. And it's one of my favorite phrases I learned from Steve over the years was, great that we have a root cause. How do we have fewer root causes? And understanding that and detangling that is difficult if your technology debt is both large and also just bolted on without thinking about, okay, we were here as a company positioning, as a product positioning, we're now here. The platform is no longer fit for purpose. The process has too many around the corner turns, too many hives, too many handoffs, and you just need to rethink it sometimes. And that takes courage, frankly, particularly at a large organization.
And let me add to that, because both Melinda and Lisa touched on a topic. In terms of the permanence of anything we build today is shorter than it's ever been before, and that's the mindset we should have. So how many of us, when we talk about major platforms, it's a multi-year effort. We shouldn't engage in multi-year efforts anymore, because by the time we finish with it, the world has moved and we've got a wonderful platform for the world that we just came from. And so there's this phrase that I didn't invent, but I've heard it, and so I repeat it, called chaotic architecture, which sounds unsettling. You know, you don't want to go to, we're going to build something chaotically. But chaotic architecture, the implication is that nothing is long-lived, probably less than a year, and that you should assume that unlike having a multi-year depreciation cycle for these great capital projects you're doing, you're going to throw it away at the end of the year, no matter how important it is to your company. And you could start over. Or you could swap huge pieces of it out because you designed it for that, loosely coupled. So for instance, in the world of machine learning, there's like all these great software packages that people could use. And you might fall in love with the one today, doing this exhaustive evaluation, say this is the one we're going to use for the next 3 years. And next year, somebody else comes out with a better one. You say, oh man, I wish it was easy for me to switch. You got to anticipate that and make it easy for you to switch. And don't feel bad about throwing the old one away. So the change cycle is very, very rapid, and rather than people say, well, we're spinning too many cycles, no, that actually keeps you ahead of the pack. You don't want to do it too much because then you're chasing shiny technology objects. But this idea of projects being very short-lived, and that's a good thing, not a bad thing, and you build it that way from the beginning, that's actually the way that's accommodating this rapid change that we're going through.
One thing that I'd like to add, and based on what Melina introduced, is that in big organizations you still need to have to manage the BAU. So how do you introduce change? And one way, which is what we have at Cities, we have the innovation labs, which are centers in New York. There's Dublin, Tel Aviv, and Singapore, where you have both business as well as technology teams that are facilitating new projects, new ideas. They coordinate with the business and with technology organizations in the bank and outside the bank. And so when somebody has an idea within the business anywhere, the idea gets to a board. That board decides, yeah, it makes sense, let's think about getting a group of people to work on it. So you get a small group of people, say 5, 8 people, to work on that particular idea. They will start fleshing it out, and they'll go through multiple stages of fleshing it out, asking for funds in case they need to develop something, to get legal expertise or whatever type of expertise from outside the organization. And so they'll go through multiple stages where they continue to flesh out the idea, getting further and further funding if necessary, until the point where, if it turns out that this is something that makes sense, that is doable, that is commercially viable, then it'll then get funded as a project. And so this is a way to, get people to generate ideas, have those ideas go through some flexible, maybe not chaotic, but flexible and not too rigorous process to get it to a certain stage where it has been vetted, and then it's ready for now, making the necessary investments for it.
Mm-hmm. Fair enough. I'm going to ask my last question and then open it up for the panelists. One of the things I've always felt about, and we've been seeing some massive growth in cloud, big data. I mean, almost every major emerging technology that we have looked into. I personally feel that we are at a cusp where we're going to see a massive shortage of skills, which would either stall this for a period of few years till AI kicks in, or something will have to happen. I personally think there's going to be a massive disruption over the next couple of years or so. What are your thoughts on it? The shortage of skills. How do you fix it?
On one hand, whenever anything new comes up, there was a shortage of Oracle DBAs at one point in time.
Oh yeah.
Right? So now there's a shortage of people who understand big data, analytics, etc. So, the market forces eventually catch up. But yes, in the early stages of adoption, there will be skill shortage. What we have done on our side is, in order for our architectures to have longevity, all the configuration and the front ends of everything we do are our own intellectual property. And then we have written our platforms in such a way that you could generate different, the programming language or the technology, which is the flavor of the day, becomes the actual execution engine. So as an example, Basel compliance, some of the Basel laws, rules, and the business logic haven't changed for a decade. But you keep replatforming, from Java to ETL to big data, etc. So our core logic capture engine is our intellectual property. So that doesn't change. We just change the engines underneath it. So techniques like these have given our architecture the longevity, but allowed us to keep up with different execution mechanisms as they become available. So those are some of the strategies.
Lisa.
Yeah, I think the shortage of skills is a really interesting. It's a real issue. It's not only an issue for skills; it's also an issue for diversity in the talent pool. We need to have more women in programming and engineering and in technology. And if you look at 5 years out, the need for technology and coding jobs in the U.S., will exceed 500,000 open roles needed, and graduating from our universities in the U.S., we don't have enough to fill that, number one. Number two, of those roles needed, only 10% will be filled by women. That is shocking and a little bit disappointing because, as we all know, the most resilient solutions we drive comes from diversity of thought, whether it be cultural diversity, background, gender, education. Bring in a liberal arts major, put them on the technology team, right? So I think it's really important that we embrace teaching young people at an early age the core elements which are of technology and coding, which is problem solving, thinking about if-thens, thinking about how to QC something, thinking about sequencing, thinking about pattern finding. And I just personally think we need to get that deeper into our public school systems in the US. And if you look globally, those skills and the math and engineering and that type of problem solving skill is far more prevalent outside the US. And I do believe that is an economic gap as well as I think a diversity gap for us in the US. And I'm involved in an organization called Girls Who Code. And it's a great organization that really tries to engage young women at the early stages to get their interest, to pull them all the way through the pipeline to college, right? And then to college into the workforce and create mentoring and really help to diversify, as well as I think, expand the population of young people choosing technology skills and careers. So,
Steve?
So, of course, there are many average talents walking around doing these jobs, and they're great contributors, but there's a rule of thumb in software development, and probably applies to a lot of other disciplines, that one great person is the equivalent of 10 average people. And so you could pay a great person 5 times the average salary and you still save money. And then the complexity that you talked about gets reduced because you can have a smaller team of really talented people as opposed to a very large team of average people, and you will get better work done faster. The only problem is finding those people. And if you're an elite employer whose name everybody wants on their resume, and we know that most of them are in Silicon Valley and a few other places, so those guys compete with each other for the talent, and they have huge checkbooks. But if you're just one notch below that, if you're a name that not everyone recognizes, and so you don't know how it enhances your resume or why you would go there, or it's a 20th century company, and so therefore it's your grandfather's company, it's not the hot, exciting new company you want to go to. Trying to get people in the door there, let alone can you pay them as much as the top names can, but get them to come and visit you, the top talent, it's a really hard thing to do, and everybody's competing for the same resources. AI is hot, and data science is hot, and some of these other areas. So there aren't enough people to go around. My way of solving that has not been eventually we'll hire somebody because that takes way too long. It's not deterministic. It's let's admit the fact that we are not going to get 10 really great people in the door. We don't want to have 100 people to do what 10 people could do. We've got to go for outside resources, whether it's consultants or outsourcers or whatever you would like to term them. Let's just go to recognized expertise, have them help us, and hopefully we'll do some knowledge transfer along the way and we'll hire some people so we don't slow down the cycle, but we admit the fact that we will never have all the seats filled with superstars because there just aren't enough to go around.
Yeah, I would just add to that a couple of things. So first of all, you cannot expect to do everything. So you need to partner, and there's the market is full of companies that have abilities in multiple areas. So I think that, there may be a skills gap, but I think that there is enough interest. There's enough other organizations that have skills and abilities that you can, work with, because you cannot do it yourself. So I think that, you have to partner. And I think the second thing, again, the point that Steve said is, if you look at all of the kids that are graduating with engineering, math, computer science, or even MBA degrees, where do they want to work? It's in the Facebooks, the Googles, the Apples. So, that's attracting people into those fields. And it's attracting people into technical types of jobs, or jobs that are related to technology. So I think in a sense, these companies are helping change the environment so that people will gravitate to those types of jobs because it's exciting, because it's the in thing, and because they're well paid. So I think in some ways the market will start to correct itself by providing the right opportunities, because those companies are successful, they can provide well-paying jobs, and those companies are global. Therefore, they will be able to provide jobs in multiple locations. Most of these companies don't need specific locations. They're built from the ground up to operate anywhere. So they could hire wherever the talent is, which is the fact that will help fill those skill gap, is that there's talent everywhere. The talent will come up because the opportunities are there.
Fair enough. So let me open up for the audience if they have any questions.
The question I'd like to ask is the role that regulation plays in either encouraging or discouraging innovation. What is your take on does the regulatory environment cause it or totally stifle that?
For us, it's been a great catalyst for innovation, actually.
Yeah.
For example, we do reg reporting on with big data as our underlying platform. So it's, our core business processes are now running on these platforms, on these modern analytics platforms. And with the onslaught of requirements that we keep getting and the increasing volume of them from the regulators, it keeps pushing us because our budgets cannot grow the same proportion at which the regulatory requirements are growing.
Right.
So these are great catalysts right now, for us to innovate and do things more efficient, more faster, better.
I agree.
See, and I would take, and that's an absolutely valid point. And the other side of that is, and if you put yourself in the position of a regulator, and they're watching these things fly past them at the speed of light, and it's their job to put their arms around them and figure out how fast they should be moving. I certainly have been in situations where you propose an innovative idea and you notify the regulator, and the regulator says, whoa, wait a second, slow down, don't get over your skis. I don't fully understand that. We've got to study the implications. And so it slows you down because they don't want to say, yeah, it sounds good, go ahead. And then once that horse is out of the barn, it's kind of hard to put it back in. So it can stimulate innovation, but it also could be an inhibitor to innovation if regulators, being conservative by nature, because that's part of the job, right? They're not supposed to be bleeding edge. To say, hold on a second, we need to understand this better because we don't want any unintended consequences of this. So it can go both ways.
Yeah, I think I agree with Milind. It's been a catalyst to reduce frank tension, to reduce silos, to cut across borders. I think it's forced us to rethink the way that we do things. So in many ways, it sort of helps us or forces us to look at our business in other ways of how is it that we could resolve the information request from a regulator in a smart way. The hard part is when internally within the organization, people overinterpret or get a certain concept of what the regulation, how to handle with the regulation, And that's a conversation that needs to happen to make sure that, it doesn't impact the business. But overall, I think it spurs innovation. It spurs changes that, simplify things, make them more accessible.
Anybody else?
I know Lisa mentioned about the customer experience and a lot of the, artificial intelligence and the bots that are being put into place. How are you checking the validity of the data, both at a B2B and a B2C, whether it's a payment that's being delivered, a settlement of a trade? A lot of this stuff is not always 99.9%
Yeah.
accurate. And what is that doing as far as the analytical side of, are we really settling trades? Are we
Sure.
delivering the right customer experience?
Sure.
What's impacting the QA process?
So for example, your point, I'll use the middle office, so our trade settlement, collateral management area. In 5 years' time, we'd like to have no middle office. We'd like to actually just collapse it. And we're moving to managing by exception rather than positive affirmation. Actually, we've already done that. And what we're starting to use is big data to. It's interesting because where we've found that the tools we need to deploy is our hypotheses, our intuition tells us this. Let's test that with the data, and if that proves out to the hypothesis is correct, that this broker that we normally deal with, if we trade a Irish security near the end of the month, they regularly fail, right? So actually these things come from, and not always, but sometimes from actual observed experiences. So what we've discovered that is in our middle office, to your point on, managing the exceptions in QC, we actually, can feed in a series of past examples and contexts to identify where we think we're going to have exceptions. And so it helps us get ahead of it. So for example, in our municipal bond data that we use to manage our portfolios and mark trades, terms and conditions data, we have identified that 60% of the data in certain categories comes incorrect from one data vendor and not from the other, right? That helps us actually when we have 4 data vendors and we're trying to decide what are the terms and conditions for the, Cuyahoga County, Ohio municipal bond that's covering the bridge and roads, right? It's that level of terms and conditions data that we take in 5 different data vendors and we pick different pieces from each, right? Because we've basically discovered what are the reliable patterns. The trick is to not get wedded to those because, those patterns can change. And so we have to have, a process to be rethinking those. But, we do use data to help us predict where to focus our QC. Because you can't, you get to a certain point where you can't do it everywhere. It has to be sampling.
And I would add to that too, and the same logic applies to security. Not that long ago, people said we got to make our systems secure so they can't be hacked. We know that that's pretty much impossible because even if they're hack-proof today, they might not be tomorrow. So as Lisa said, rather than take the mindset, which I don't think anybody does, we're going to make our systems bulletproof. We're going to make them the best we can. We know there will be insecurity exploitations and data variances that we don't care for. We'd like to make those minimal, those variances. We'd like to make them as infrequent as possible, but they will happen. And our job is to catch them and know how to deal with them when they happen and then go on to the next one. And that's the realistic way of looking at the world.
Fair enough. Anybody else?
Thank you for something really stimulating and interesting discussion. Can I ask a question about something that all of you have alluded to and even mentioned in a couple of instances, but it seems appropriate to bring it down in the context of 800-pound gorillas from outside the store. Consumers looking at the services store. I'll give you a scenario. Okay, I don't know if you're doing this one. The scenario is that tomorrow's newspaper has a headline that says Apple, Facebook, Google, and Amazon announced an active entry into financial services to compete head-on with the industry. And when this is triggered by your comments about Citi being a software company with an IT license.
You're most welcome.
Exactly.
We look forward.
They're already in it. They're already in it.
But in a very minor way, just doing payments.
You know, there's an interesting anecdote related to this. You know, the older definition of leadership was, you know, you conquer everybody else and you be the last man standing. You know, be it market share or. The newer definition of leadership is you're in the center of an ecosystem with a lot of partners and collaborators, and in your area of core competency. And then you are a supporting part of somebody else's ecosystem in their areas of core competency. So that's how we are all progressing. You know, so Uber came along and it disrupted a few industries, but for us, they created you know, a business demand for satisfying a customer that requires a global payments network when they get paid in cash in, you know, 100 countries around the world. And you know, so so that's what I mean by, yes, disruption happens somewhere, but it creates opportunities as well. And modern leadership is about being part of an interconnected ecosystem. We want to be interconnected with all these players and you know, do things better.
And can I just answer that one too? And so we all keep on reading it, especially more frequently, that Amazon may become the first $1 trillion valuation company, and that speaks to your comment. And these new markets are characterized by not everybody has a nice piece of market share, but it's winner take all because people want that kind of market. And if you look at it, Amazon, they even have space vehicles. So they're thinking about doing financial services on other planets. I don't know if Citi and BlackRock are doing that, but Amazon is thinking about doing it. So they have really big goals there, and it'll be interesting to see how it comes out.
I think they're already in this space, right? You can go on Facebook and you can set up a crowdsourcing funding campaign, right? You can do that to raise funds for, you know, a particular, you know, somebody needs, I don't know, get out of jail money, somebody needs a cancer treatment, whatever, right? You can do that on Facebook and it connects right to donation process. So they're already in financial services. They're just not in it in the way we want to label it, in the sense that they're not putting out ATMs, right? They're not putting up, you don't walk into, you know, you don't walk into a bricks and mortar building for Facebook services. Right, but I would say they're already in payment systems, in fundraising, in you know, the distribution of products, because they're in their the distribution of information and the mind share and the customer acquisition process. So I think they're already in it, and they want to get more in it. Great.
I would just add quickly that, you know, they are already, you know, you look at Alipay, you look at WeChat,
Yep,
you look at Paytm in India. They're already in this, and so there's a challenge there, and there is, you know, potentially an opportunity that banks will lose if they do not get involved and innovate enough to be able to challenge these new entrants. So while we, you know, let's call them the legacy financial services organizations, we need to be able to work with them, but to also to be able to compete with them, because they're posing a real challenge. Absolutely.
One of the things that's interesting that you realize is, and this, we all say this, right? Financial services isn't the biggest industry in the world, right? So maybe financial services as a target market isn't big enough for them and for their appetite, right? For the scale of what they're trying to affect. You know, the wire, just being part of the infrastructure, whether it be wireless, communications, chat. Everyone in the world wants to chat. There's people who chat who don't have bank accounts, right? So why is financial services so attractive? So I think sometimes we should look at where they're not and understand that maybe it's just not that attractive for them, because they're certainly not dumb companies, as we all know.
Yeah, fair enough. I have two comments on that, and we'll close out. One, I think they're more busy solving world problems. I think this is not that big for them. Second, the margins aren't there in the financial services industry. It's not as lucrative as the software or the internet area. Far more money to be made there. So with that, thanks everybody. Had a great time. We'll chat up.